All right, guys, you're welcome to my YouTube channel, the Simplified Crypto&FX channel. Okay, which is this. This is for my newbies. Okay, I make videos both for the newbies and the OGs in the system. But this current video I'm making right now is a continuation of my teaching series on and for newbies, how to navigate the crypto industry seamlessly and profitably. Okay, so I've talked about this, how to use conditional and OCO orders for better crypto trading, for better crypto spot trading. I've also talked about understanding limits and market buy orders, set orders in crypto. Okay, then if you're a newbie, you come here, you watch how to get registered on centralized crypto exchanges. Okay? Then this is also part of my FA studies. Necessary checklist before investing in crypto markets. Okay. Now, I want us to head into technical analysis part of the crypto trading. All right. So, as you all have heard, I know some of you must have come across technical analysis, do your TA, do your FA, which is fundamental analysis. What are what is really technical analysis? What can you say technical analysis is all about? All right. So technical analysis makes use of price charts, historical price charts. Okay, historical price charts or information to predict what will happen in the future. Okay, so over here now, these are past historical events. This thing you're seeing right now, let me say it. This event, this financial event has occurred. All right, they have occurred past. They are now histories. All right, they are now histories. Okay, so we are going to use this history to predict the future. All right, we'll use this set of histories, okay, to now predict the outcome of what will happen next, as in the next action of this token, BNB USDT. So that's what technical analysis is all about, okay? You make use of chart patterns, charts, technical charts like this. All this is called charts. You make use of historical price actions of any currency. These are the price actions. This combination of candles are called price actions. So you make use of these price actions to predict the future, all right, or of any particular coin you are actually analyzing. All right, so technical analysis goes with what? The past. You use the past to know your the future. So history is important in trading. Okay. Now that is for definition of technical analysis. So on this particular video, I don't want to rush it. Okay. I want to make you guys understand this thing called candlesticks. All right. I want you to know how to read candlesticks. What are candlesticks? All these things you're seeing here. All right. This red, green, red, green. They are called candles. These are candles. All right. These are candles. Okay. Candlesticks. And they have their interpretations. They have their meanings. Okay. They have their interpretations. They have their meanings. So as analysts, as a chartist, okay, as a technical chartist, or as somebody that is learning about crypto trading, you should be able to know what all these things entails so that you can combine them accurately and make predictions and make future predictions on any currencies. So on this video, I would like to be talking about I would like us to study individually what this currencies here, all these price actions here means these candlesticks I'm pointing with my mouse here, okay? What they actually go for, okay? So let's start. It's going to be a brief video, all right? I won't bore you guys with this. Okay, fine. This is, in this candle, we have the green and the red. You're seeing green candle. Though these things can be set, all right? These things can be set, but for the purpose of this course, we'll be using only green and red, signifying buys and sells, something like that, okay? So what this candle does is that it records the transactions. It records the transactions, the buy and sell transactions that happened over a period of time, okay? Over a period of time. From here to here is called something, okay? Now, let's start by reading a candle. Okay, a candle is made up of the thread, okay, the body. That is just a typical character of a candle. A candle, you have the body of the candle, you also have the thread of it. Okay, so for a Greek candle, market opens at the bottom of it, okay, and closes at the top of it. You know, when they say market opens or market closes, it depends on the time frame I choose. Okay, right now I am choosing a daily time frame. Okay, a daily time frame. So what this candle does is that in every 24 hours, it will record the event, the economic event or financial event that happened over that period of time. Okay, it will now form as a candle record. So as a chartist, what you should do is just you come. It's not every time you be checking the news to know what is happening, but you can check the charts, the price actions to be able to know what the market is saying. So for you to be able to interpret what the market is saying, okay, by looking at the candles. These candles I'm pointing at. So let's pick up one of these candles and demonstrate them in their unique style. Right. So, like I said, a candle has two characteristics. A candle has a body. Even the normal candle we use to light up, it has a body and a thread. Okay, just like, but sometimes in a chart like this, you have two trays, the up and the down trays, and just the body. So it's still the same thing. A candle has a body and a thread. Okay. Now, for a Greek candle represents buys. All right. A Greek candle represents the bulls, like the buys, the buyers. People are buying. While a red candle represents that people are selling off. All right. So let's read more about this candle. Okay. Now, when you look at this candle, I want to zoom it. Okay. Remember what I said, that a candle has a body, which is the body, and a thread. Okay, so and this candle, each of this candle equals 1 day, 24 hours. Each of this candle represent the financial activities that has happened over the past 24 hours. All right. So over the past 24 hours, markets for a Greek candle opens at the bottom of it. Market opens at this price. Let's use a line for that. Market opens at this price. This is where the market opens. Let's just say that. Let me use a very tiny thickness. Okay, 2 is way better for us. Or even 1. Let's use 1. All right. See, it didn't tally. Let's put it here so that it tally. Okay. All right, it has tallied, isn't it? So this market opened around 6:47. On which day? That day was on the 3rd of December 2024. That means it will close on the 4th of December 2024. So when it opens here, people started buying it. There was large amount of buys here. They stopped here. Okay. This is where there was a large amount of buys. Okay. We didn't know if, but you can interpret it in different ways. Let's just say that this market opened here. It opened at 647 point something, isn't it? And when it opens at that price, there were a massive sell-off. People started selling it. People sold to this point, to this low, 622. People sold to 622. Now, I'm going to use a red line for it. I'm going to use a red line for it. Okay, people sold to this point, 623. All right. When it opened at this price, but then it came down below the opening price. Okay. It came down below the opening price, and people started buying it up. Okay. Then it keep rising, rising, buys started happening. Then they bought it to this point. Okay, let me use another line for that. They bought it to this point. Okay, green. Use a green line for it. It is 750. Okay, it got to 750 from 623 to what? 750. All right. But the market opened here. But all this thing means is that yes, then later on, after it got to 750, sellers started selling it. That means the price was rejected. That's the price, it got to that point and there was a little kind of sell-off on it again. Then it dips to this point where it closes for the day. Okay, let's draw a line. No, let's draw a line there. It closes at this point. Okay, so remember the opening price and the closing price are much different, because the opening price is lower than the closing price, giving us a great candle. Okay, this one gives us a what? A great candle, in the sense that the opening price is far less than the closing price. So when you check the difference here, there's a lot of gain in this. That's why we have green candle here. The bulls won the bears, like the buyers won the sellers. So it's recorded a very bullish candle here. A very bullish, we call it bullish candle. It recorded a very good sign here, because there was massive buying here. There was very massive buying on this 24 hours. Then the second day, there were little buys. Okay. So this is for a Greek candle. A Greek candle opens at the bottom of the body of the candle. The bottom of the body of the candle, not at the bottom of the wick or the trade. This is the wick or trade. You call it wick or trade, okay? So not at the bottom of the wick of the trade, of the wick of the candle. No, it's at the bottom of the body of the candle. That's where the market opens, and the market closes at the top of the body of the what? Candle. It closes at the top for a Greek candle. All right. And another way to know that this is a Greek candle is that the opening price must be higher than the closing price. All right. That's another way. You need to have opening price, closing price, then the price it got to this point, the rejection price now 750. That was the highest it got to before it thing dipped, isn't it? Then, so this is a very bullish what candle. Now let's read let's now go over to a red candle. Okay, a red candle is a reversal of the Greek candle. Okay, a red candle is a what? A reversal of the what? The Greek candle. What do I mean by reversal? Let me clean all these lines here so that These lines will not confuse us, okay? Okay. All right, so let's now move over to a red candle. A red candle is a reversal of the green candle. All right, so when you check this red candle, a red candle opens its market at the top of the body of the candle and closes at the bottom of it. In other words, the opening price of a red candle is always higher than the closing price, telling you that yes, sellers overpower the buyers. So making it a red candle, like a candle that is in a deficit. That trading day isn't good for the crypto space. For those that are in long position, the shorts are winning, that's the bears are winning, and the bulls are actually crying. So that's what it means. So it's an opposite of the green candle. Okay. Now, look at this candle here. Market opened here. All right. Market opened here. Okay. And it traded. People started selling, 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 selling to this point. It opened at this point. Let's mark it. All right. This is the opening price. Very nice price, isn't it? 741. Okay. That's where it opened. But when it opened, people started selling off. That was a kind of massive sell we got here. See, we got here, isn't it? We got here. All right. Let me use a red for that. So 641. Imagine the huge amount of cells. Okay. Now we got to this point, 641.41, isn't it? Then the buy said no, the bull said no. They started buying, 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 buying. So we got to this point. We had the time, 24 hours elapsed. 24 hours elapsed. So this is the closing price of the market. The closing price of the market is that. Okay. All right. This is the closing price of that particular candle. It opened at 741.80 and closed at 688.92. So that particular day is a lostful day. Is a day that yes, those who bought above or those who bought at 741 made a very good loss. So let's calculate the loss. Come here and just calculate the loss. Let's assume that you bought long and you want to make more profit, but eventually thing you bought at this price, Abi, which is 741, which is your buying price. Okay, now the market ended at 688.92 at this point. Okay, let's leave it there. This is where the market ended, 688.92. Now, you've lost about 7.13 percentage loss on the coin you bought. Okay, so that's for the red candle. Okay, the red candle is always the opposite of the word, the green candle. Okay, so please understand the tutorials now, understand things I have said about the candle. This is just a starting point. I wouldn't like to bore you guys with everything on candlesticks. So I'm just picking the basis for you to understand any other thing, okay, that concerns technical analysis. You need to start from the basis, and the basis are understanding how to interpret what candlesticks. Remember, this is the time I selected. You can select 1 hour time frame to check uh what has been happening in the past 1 hour. Okay. Now see what is happening in the past 1 hour. Now you see market is deep in the past 1 hour. In the past 1 hour, market is really deep. Market has crossed. Anyway, this I will let me just focus on the teachings, okay, before I start analyzing right now. Okay, so market has really deep so far. Okay, so still yet, this is red candle, red candle, red candle, red candle. What is this telling you? It's telling you that yes, people are selling off. So wherever you see red candles, red candles, red candles, red candles, it means what? Massive sellings. People are selling, depending on the length and the volume of the candle too. You need to also check that. But for the purpose of this course, these teachings, I just want to understand how to read candle, how to interpret candle. You know, every time frame you selected means that it is recording the past event, the past financial event that happened on it in the past 1 hour. I selected 1 hour, so this is what is happening. The last 1 hour, look at from this is a 1 hour, 1 hour, 1 hour, 1 hour, 4 hours, 1 hour, 1 hour, 1 hour, 1 hour, 1 hour, 6 hours. That is 5 hours for 4 hours, 9 hours. This here is the event that happened in the past 9 hours or 10 hours. Okay, before we now started having this kind of red candle, red candle, red candle. Okay, so briefly, or rather summary, in summary, a candle is made up of what? A body. This is the body of a candle. Sorry for this thing I just drew. um a candle is made up of what? A body and week. It may be 2 weeks, up and down week, or maybe 1 week, depending on how the market worked that day. All right. So looking at here, this is the body and these are the wicks. Okay. They all have their own meaning. All right. And again, I said that we have two types of candles. We have the green candles and we have the what? We have the red candle. Okay. What does the Greek candle? What does the Greek candle interpret? Greek candle tells us that this is a buying candle, a buying momentum. All right. And again, market opens at the what? At the bottom of the body of the what? The candle and closes at the top of it. Okay. Then in reverse, for the red candle, market opens at the top and closes at the bottom, showing you that yes, the opening price is always lower than the what? Closing price. So market is dipping. People are selling off. So this is just the basic interpretation or basic understanding about candles. Okay. So guys, I hope this makes sense because if you don't understand this particular course or this particular topic about candles, you won't be able to understand the other things I'll be teaching. All right, the other chart patterns and the rest I'll be teaching in the course. So this is the basic. You need to play this video several times for you to, if you don't understand it, but if you understand it once, please, it's good. Then you move over to another one. All right. So like I said, please, if you have been watching my videos and you haven't subscribed yet, you know, uh please, I plead, try and subscribe. And if you have any question to ask, throw them in the comment and then I will come around and then answer your questions. Okay, for those that have already subscribed to my channel and watching me, giving me the word hour, I appreciate you guys. You people are my #1 fans. I thank you for showing me that love, and I promise to keep bringing detailed, simplified crypto tutorials here for everyone. Okay, so let's make that money together. You know, thank you, thank you, thank you. I love you. Bye.